Hi everyone, this is the second part of knowing about a CROMTON stock. Before going into any measurements, first we can understand what is compound growth. The compound growth is a very important measurement to understand about company. This kind of growth can be applied in various measurements like sales growth, profit path, ROE, likewise. So before going into those kind of compounded growth of any particular measurements, first we can understand what is compound growth. The compound growth rate is a measure used specifically in business and investing context that indicates the growth rate over multiple time periods. For example, if we deposit our money in a bank, they can ask us a compound rated interest. That is, compound rated interest means, for example, the interest is 7% per annum. After 1 year, the 7% of the interest will be again deposited on the deposit amount. So the next year onwards, we can get interest for those kind of interest. So after 5 years, the cumulative value will be matured and we can get the total amount. That is in the case of compounded interest. Here it is different. In the compounded interest, every year the interest rate is same. If it is 7 years or 8 years or 9 years, likewise. But here the sales rate or the profit path or the ROE, the percentage change in every year is not the same. Sometimes we can get 10% sales increase from the previous year. Sometimes it may be 25 years. Sometimes it may be minus 2%. So this kind of volatility incurred when we are analyzing the measurement. So this volatility can also be considered. It will be smoothed away by calculating this compounded growth rate. So the metric smooths the historical data, omits the effect of volatility, and implies a steady growth of the data series. Investors can compare the CAGR of 2 or more alternatives to evaluate how well one stock performed against other stocks in a peer group of a market interest. So individually, if you are analyzing the compounded measurements for one stock, that doesn't give that much information. When we compare it with its peer competitor in the same industry or the index of that particular industry, we can get more details how the stock is performing over the years. The reason is all the stocks in a particular industry are working in the same economical conditions, same demand and supply, same kind of marketing strategy. Even though all those things are same, how these are performing and how these are competing each other, all those things we can get with this kind of parameter. The formula we can use is the compound growth rate is Vn divided by V0 to the power 1 by n minus 1, where Vn is the amount at the last year. For example, if we are calculating for the growth rate of 5 years, then the Vn is the amount at the 5th year, and then the V0 is the amount at the initial year, I mean before the 5th year, where the n is the number of years. We can see it in an example in detail. The example, a company has shares of a company has a sales of 250 millions in year 1, 275 millions in year 2, 500 millions in year 3, 880 millions in year 4. So from the first year 250 million and the second year it is 275 million. So the percentage of sales growth is 10%. At the same time, in the third year, it is 500 million. That means 82% of sales growth from the previous year, and the last year it is 76% from the previous year. So instead of saying 10 years in first year, 82% in second year and 76% in third year, we can use the compound growth rate. It smooths the effect of, it omits the effect of volatility and smooths the historical data. So if we say that the compounded growth per year is around 52%. Instead of saying 10% first year, second 82% second year, 76% in third year, we can say that it is a compounded growth of 52% per annum. It is not true that every year we are getting 52%, that is different, but the overall we can compound it and say that every year the around 52% growth we have got in the sales. So when we apply these values in our formula, the Vn is 880 million and the V suffix 0 is 250 million and N is 3 years. So when we apply all these data parameters, and we can get the 52% value, that is 0.52 value. So this is the way we can calculate the compounded growth rate. So this compounded growth rate can give a clear detail how this is performing with when compared with its competitive stocks. Even though it is not giving good picture about the stock, but we can get a clear idea when we have this value as well as some other measurements, important measurements, then we can have a good view of this kind of stock. So we will see some of the compounded growth rate for sales, ROE, profit path for this CROMTON stock, and we can also compare those values with its competitors in the consumer durable industry. We will see it in the next video. Thank you.